please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Your Stocks. I'm Nigel D'Souza. With me is Ekta Batra. And in fact, today the bulls are put up with a bit of a challenge. Intraday, we did see a bit of a recovery, but unfortunately, again, we're selling off around closer around 120 points. And you know, Ekta, what's different today from the other couple of trading sessions are that today the HDFC twins, they're getting sold into L&T. IndusInd Bank, all these stocks are getting sold into. So by the end of the day, I'm going to look at the institutional data very, very closely. Last couple of days, yes, we did see selling. Yes, we were down close around 1,000 points on the Sensex. But the FIs, they were net buyers. 2,000 crores in 2 days. And the institutions, they were wiping off what the DIs were doing. So today, it's going to be very, very interesting to look at the institutional data. Because, you know, bulk of the losses have come in from some of these high quality stocks, banking names, financial names, FI favorites, the HDFC twins, they are accounting for nearly around 50 points of the losses that we're seeing in today's trade. But Ekta, we've got the color right. It's red.
Yes, absolutely. And as of now, we have the Dow futures, which are down around 0.6% as well. So it's showing a cut of around 153 odd points. Yes, that changes closer to time, but that just gives you a kind of indication that maybe the pain globally is probably not over at this point. And yes, we're doing probably relatively better than the 600 plus point that we saw on Friday for the Dow. But let's see whether we see any sort of you know, worsening in terms of the market levels, especially in the last 1 hour of trade. But as of now, these are the top stories that we're tracking. Well, Bosch is on our radar today after it came out with what was a good set of numbers this quarter. The revenue came in around 14% higher on account of strong growth in their mobility business. The net profit, however, failed to meet street estimates. So, Mr. Bhattacharya, the MD of Bosch, now joins in to discuss the performance this quarter. Mr. Bhattacharya, hi, thank you very much for taking the time out. So, can you start by giving us a breakup in terms of the revenue this quarter between the mobility as well as the non-mobility business?
Yeah, mobility has played a major role as always, and as I've told you before, that mobility business is approximately 80 to 85% of our business, and non-mobility is around 15 to 20%. So that still holds good, and mobility has, of course, in the last quarter come up with pretty strong numbers, as you rightly mentioned.
All right, Mr. Bhattacharya, if you could give us a breakup, you're looking at your top line. What was the growth in the different segments? That's diesel, gasoline, aftermarket segment. If you could give us a sense there.
Yeah, diesel had a very strong growth, a plus 30%. So did gasoline. Aftermarket had a strong single-digit growth, and diesel and gasoline, of course, while the bases are relatively lower, we saw a pretty good pickup from our customers. The demand continues also in this current quarter, and partly this is due to the product mix that we give for the new generation products, but also partly or greatly, I would say, there's been a pretty good demand for both the HCV sector, the tractor sector, and also in the passenger car sector.
Okay. I think your aftermarket segment has recovered from last quarter. Is that correct?
Yes, we've had decent growth in the aftermarket. It's, of course, naturally not as strong as the diesel and gasoline numbers, but we have seen a growth in this quarter in aftermarket, and that's very important for us because Bosch is the largest player in the aftermarket amongst the auto component manufacturers, and we have a very good brand and a very good reach through our car services, our dealers, and it's heartening to see that last quarter we've had a decent growth.
Okay. With regards to the other two segments, diesel as well as gasoline, you're seeing double-digit growth, I think, at least for the second consecutive quarter. So in your sense, are you over the hump of, say, the GST challenges, plus what might your outlook be for these segments going forward?
Yeah, I think you've asked a very important question. For example, if you remember last year at in November we had the demonetization effect, and which had an impact on the aftermarket and in the other areas. And GST, of course, is behind India by about 7 months. So on one hand, we do see that in India overall, but also in the automotive market, while it's not completely over, there is a significant recovery after GST. Second, we've seen that there's been a good demand for products. I think that's the fundamental thing, that there has to be a good demand. And finally, we see that the coming quarter, which is January to March, the last quarter of the fiscal year, that this demand is continuing. Very important for us to see is not the growth on quarter to quarter. We need to see the trends that has happened in the automotive market. Let's take HCV. Heavy commercial vehicles had a peak of 370,000, if I remember rightly, in 2011. Now in 2017, that peak is about, 2018, that peak is about to be reached. So if you look at LCV, 540,000 in 2012, that was the peak. And in 2018, we are perhaps not going to touch that. So it's not just important to look at quarter to quarter. It's important to look at the trends and the peaks that happened, and then the overall demand. And in that context, I would say, last quarter and the coming quarter shows a healthy trend for movement of overall demand going up, and tractors is the peak, which has crossed 7 lakhs annualized volume, and 2013 was the peak of 6,90,000.
Okay, all right. Mr. Bhattacharya, we are running a little short on time, but we would like to ask you about your margins. Out of your total raw material requirement, how much of it are you importing? How much of it are you procuring domestically? And if you could give us a sense about, there is some import duty as well that has been levied. Will that pressurize your margins going ahead?
Our total raw material content is around 54%. And this changes a bit based on the mix, based on what we produce, the type of products we produce, as well as what we trade, that is import, as you rightly said, versus what is locally produced. So we have a very clear philosophy in Bosch that we start with import on lower volumes. And when we set up manufacturing lines, then we are able to cater in a localized way. So in summary, I would say 60-40 is local and import. And we don't indicate the margins because we don't indicate guidance. And material cost, I told you, was about 54%, which around 54-55 is okay.
So import is currently,
it also depends on the product.
Import is currently 40% of the mix.
Yeah, but that depends on the type we get in. So it could be 35, it could be 40, around that.
Right, Mr. Bhattacharya, I just wanted to get some clarity. There is an import duty, right?
On the total,
that has been levied on this, right? Isn't there some import duty that in the past budget we have heard of an import duty that has been levied? How do you read that? Is that a pass-through for you all? Will that impact your margins?
I would not talk about margins, as I mentioned. There are certain duties which have a slight impact, but we don't link it to margins. We look at efficiencies. When duties hit us, naturally they impact us, but we look at finally how to deliver the best value to the customer, because we give a system and we give a solution, and we look at the overall solution and not parts of it. But of course, we tackle the individual elements a lot.
Would you have to pass on a higher price to consumers?
We do not, as I mentioned, to our customers, we do not pass on a price increase based on individual events. We look at the whole system and they find value in Bosch because we give a solution.
All right, Mr. Bhattacharya, we're going to let you go on that. Well, for the mid-cap index, we're down around 0.7% at this point, and the Bank Nifty down around 1.5%. Let's see if there's any sort of incremental buy on dips that we'll probably see from current levels. We did see that one dip being bought, but we haven't managed to sustain at higher levels. But we have a lot of questions now, I'm sure. We have Gaurang Shah joining in on the fundamentals and Prakash Gaba joining in to answer all of your technical queries. Gaurang as well as Mr. Gaba, thanks very much for joining in this afternoon. Well, the first one is Shweta, who's in fact writing to us from Kolkata. She holds 300 shares of Colgate at 900 since the past 11 months. Long-term investor wants to know whether to hold or sell. Well, Gaurang, what would you recommend, you know, just looking past the aberrations of quarterly numbers?
Those aberrations are the reason why we have a reduced call. Good afternoon to you and all the viewers. And more importantly, our targets are also in place. So I would recommend a switch either to an HUL or something like a Godrej Consumer Products. These, again, both investment ideas in the FMCG pack are from long term.
Okay, all right. Technically, how's it looking? Colgate, Prakash?
Well, so far looks okay to me. No sign of weakness, trading at higher levels. In case she wants to, she's already on profit. If she wants, she can switch, like Gaurang says. Perfectly all right. But I would hold, continue to hold. Long term seems to be very good. If you get a dip, maybe to around 1,000 zones, those are an add of those levels.
Okay, all right. So that's the view coming in on Colgate, and we have some information which is coming in. It's a proposal right now where the Food Ministry is proposing to hike sugar import duty. To 100%. So do watch out for that. That is obviously to curb cheaper imports and check the falling prices or wholesale prices. So that's probably one of the reasons why why that's under consideration. We were talking about Colgate and the numbers have come out. Net profit, which is coming at around 170 odd crores versus a poll of around 160 odd crores. So that's a little better than our expectations by around 10 odd crores. We're waiting by for the other details as of now, but that's just the profit figure which is flashing on your screen as of now. Revenue estimates were around 1,027. So let's see what has come up. You've got the press release?
Yeah, no, we don't have the press release, but in terms of a growth, I think, you know, more than the absolute number, we're looking at around 17.5% in terms of a top line growth. We don't have that release. It's still trying to open up on our screen as we speak. The only number we have right now is that 170 crores. That's on the bottom line. Remember, in terms of margins, we're working with margins of around 25.7%. So we'll keep an eye out on that front as well. No such luck
in terms of opening the press release, right? Yep. Not as yet. So at least this would qualify at over 25% growth on the bottom line. So that should be one parameter that we're working with. But as of now, we're still waiting for the press release to open, and let's see what happens. But Nigel, any luck?
No luck at all. Yeah, we're still trying to open that.
At least the stock has recovered a little bit from the day's low. So we're seeing that sort of come in. The volume growth is coming at around 12 odd %. So that's at the lower end of the range that we were working with. Working with an estimate of around 12 to 15 odd %. That's come in at the lower end of the range at around 12 odd %. The EBITDA 282 odd crores. So that qualifies as a better margin expectation than what we were working with, around 200 basis points better. So 27.3 compares to 25.7, and that also compares to 24.5% same time last year. So there's been a really good improvement which has actually come in on the operational metric for Colgate this time. Volume growth 12%, margins which have come in at around 27% versus expectations of 25%, profit growth which is coming at over 25% this quarter. So all of these three parameters are actually looking not that bad for Colgate, and I think the operational viability is something that the street would definitely like. Nigel?
Well, I think it's, yeah, as you said, Ekta, I'm looking at it, actually advertising costs as well have gone up, and despite of that, I think we are having good margins out there. So that's pretty good news actually. Employee cost as well, that's gone up on a year-on-year basis. So on the margin front, yes, it's looking quite good. In terms of volumes, it's coming at the lower end. Any particular reason below the operating profit? No, I don't think so. I mean, it appears that in fact these numbers look pretty good, particularly the margin performance.
Revenue is actually quite okay. It's that too is above our estimates by around a %. So 18% growth is what it's coming at versus an expectation of 17.5 odd %. So I think the real highlight for Colgate this quarter would definitely be the margin picture, that maybe it's a top-down sort of improvement that they've seen, and that along with volume growth. So maybe there is some amount of you know, operational leverage which they've managed this time. I think we have Mangalam
Absolutely.
with us.
I think Mangalam will be joining in shortly. But just to give our viewers a sense, remember the stock is not cheap, but these margins look quite good, and that's the reason in an otherwise rather weak market, the stock in fact has moved to the high point of the day. But I think Mangalam's with us now. Well, Mangalam, if I take a look at it on the top line, there is a growth of roughly around 18% or thereabouts. There's a bit of a margin expansion, despite of the fact that, in fact, you know, you're looking at around 120 crores of advertising expenditure. So we'll get to Mangalam in just a bit. But for the time being, I think the reason that the stock has recovered from the low point of the day is that the EBITDA number is looking quite good. I think...
yeah, I think we'll take a break now, but we'll come back and we'll get your review on Colgate, and we'll get you a couple of other queries.
When the market's under some pressure, we just had Colgate's numbers that came in there. The reason that, in fact, the margins did beat is because the gross margins did come in higher, though, in fact, the advertising costs, that jumped up by nearly 50%. The street was looking at a number of around 40 to around 45%. That's the reason why, in fact, the stock has recovered from the low point of the day. But hospital chain Aster DM Healthcare is on our radar after the company files for an IPO. We have with us Mr. Azad Mopin, the chairman of the company, who joins in. Hi, sir. Good to speak to you. Thanks so much for joining in. First things first, sir, if you could give us some details about how much money are you looking to raise and what's the purpose of this? Will some money come back to the company?
Sure. Yeah, the large part of this is actually fresh money coming into the company, 725 crores of rupees, which is the fresh capital coming into the company. And then there is an offer for share of a much smaller amount, which is about 1 crore something shares. So large part of the money is coming into the company, and this will be used mainly for retiring the debt. Significant amount of that is for retiring the debt, and a small part for purchase of new equipments, as well as for the common corporate expenditure.
Okay. All right, Mr. Mopin, you know, we've completely run out of time right now because it's time for our other show to start. But we're going to take this conversation offline, and we're going to get you to come back, and we'll continue this conversation then. That's all the time that we have on this show.